Welcome back, ladies and gentlemen. Thank you all for joining me today. Today, we're going to be taking a look at another one of my companies that I have been looking into. I've been looking at Dropbox. I looked at Meta. We looked at Revolve. We looked at a couple other companies. So if you're interested in that, make sure to stay tuned. If you're not, then see if there's anything else on the channel that you have for you. That being said, make sure to subscribe, hit the like button down below if there's something you're interested in. And let's dive right into today's company. So today we're going to be taking a look at Corsair Gaming. Ticker symbol is CRSR. I currently own shares, obviously. And what I'm trying to do here is basically look at the quarterly results as a way for me to actually review the quarterly results and make sure that, what I think is going to happen is happening, or just if there's anything that I need to know, actually focus and pay attention on it. Second thing is, so that way if anyone else is interested in the company or is looking up or doing research, this might be like a way to spark some interest, and maybe they'll end up finding something out and letting me know, or just something like that. So it's kind of a way like a primer almost. So with that being said, let's dive right into Q3 2022 for Corsair Gaming. Looking at this, first things first, we're gonna go through earnings results, kind of going through their actual earnings release, as well as some of their investor presentation, and end on some of the questions and things from the earnings call. So first things first, the kind of highlights that they pointed out. So net revenues, 311 million compared to 283 million in Q2 2022 versus 391 million is Q3 2021. Gamer and creative peripherals segment was $96 million compared to $89 million in Q2 2022, and then $139 million in Q3 2021. So obviously, just from the net revenue side, you saw a little bit of a decrease, along with you're going to see how it breaks down for each segment. So gamer components and system segment, that's the second segment, the only other segment that they have. The revenue was 214 million versus 194 million in Q2 2022, and then 251.9 million in Q3 2021. So a little bit of a decrease there. It was mostly though on the creator peripheral side that we saw a lot of that. Operating loss was $11 million compared to operating loss of $55 million in Q2 2022. So obviously losing a little bit less in the current quarter versus last quarter is pretty good, but comparing it to an income of 10.8 million in Q3 2021, obviously not a good thing there. Again, their net loss diluted per share was 9 cents, comparing that to 0.62 cents in the second quarter of 2022, and then they had a net income per share of 2 cents in Q3 2021. So really a lot of this is going to revolve around, and you're going to kind of hear me touch on it as we kind of go through the rest of this video, but really what a lot of this is you have to think of the comps. So when they're comparing to 2020, 2021, a company like Corsair Gaming is going to benefit from a lot of people suddenly having to work from home, suddenly having the opportunity to be able to game on their computer, needing a high-end computer, needing to buy peripherals, needing to buy monitors, and then, if you're going to be at home, working at home all day, remote, even hybrid, you're going to want nicer peripherals. So that's kind of what we saw here, and what happened is a lot of people were just buying peripherals because they're working from home. So going along with that, so Andy Paul, the CEO, stated, "We achieved a 10% sequential revenue growth from Q2 2022 to Q3 2022 while significantly reducing our channel inventory in what remains a challenging environment. Sales out levels from our channel to customers were significantly above pre-pandemic levels in almost all product lines, and we're above the year-ago level in many of our product categories." So that's a really good thing. One of the other things that I mentioned in the Revolve video, and I'll mention it here too, is the fact that the inventory levels across just a bunch of different companies, whether it's retailers, whether it's just like actual brands like this, a lot of inventories are very high relative to the consumer demand. And granted, we may see a little bit higher demand taking a look at Black Friday and going into the holidays and Cyber Monday and Cyber Week, really now at this point. But we may see some, ticks up in sales just because of that. But really what this all revolves around is, can they sell full price products? And if so, what is the catalyst to sort of get them to, sell more product? And so seeing here and seeing sort of some good growth, and, especially comparing it to Q2, seeing some good growth is honestly like a godsend at this point. And I'm glad that they're focusing on their inventory, because a lot of other companies are as well. The other thing I want to mention, so as we mentioned in previous quarters, the self-built PC market has been held back over the last 2 years as demand for GPU cards from crypto miners caused GPU prices to rise, in some cases double. Now that crypto mining can no longer utilize graphics cards as they used to, GPU demand has since normalized, resulting in a decline in prices back to standard MSRP or below. We're already seeing the positive effects on this market. Additionally, in recent weeks, there have been launches of new technological platforms from NVIDIA, AMD, and Intel, and this has immediately accelerated the self-built PC market. This is because our enthusiast customer can now build a better and faster game PC for a lower cost than they could over the last 2 years. So one of the things, again, that I wanted to mention, I've mentioned it before in other Corsair videos or other times where I've mentioned Corsair, is the GPU, the graphic processor unit within a computer, is one of the most important pieces of a computer. And it's what a lot of crypto miners and, crypto farms really were using. And I remember I worked at Fry's Electronics back in 2016. Yeah, back in 2016, I almost said 17. Back in 2016 when crypto really started ramping up a lot. And I saw a lot of people get like 10, 15 cards at a time, which is absolutely insane, especially given the prices at the time. But now we're getting to the point now where companies like NVIDIA and AMD, and Intel's not so much on the GPU market of things, but they are starting to get there. But they're all starting to put out cards that actually have limiters, and it makes it basically not possible for people to use these for crypto miners. In a lot of cases, they're trying to come out with cards that are crypto specific. So we'll see what that looks like. I think going forward, we should see some opportunities there as things start to normalize a little bit from the GPU demand side, so people have opportunities to buy things at the proper price, not at some crazy oversold price. So for gaming PCs built with these new platforms, there's a need for faster memory such as DDR5, larger power supplies with 1,000-watt capability or higher, and better cooling technology, all product categories that we are experts in and have high market share in. So for peripheral and streaming product lines, we're also seeing the market pick up, and while earlier year we saw consumer levels sales that were 15 to 20% down from last year, in the United States we now see a recovery to almost the same levels as last year's as we move through the second half of the year. Europe is clearly a weaker market than the United States and Asia, and since they have low consumer confidence levels because of the war and the currency pressure have caused prices rises in consumer electronic products. Again, kind of going back to what I mentioned earlier, it's just kind of things are starting to ramp up in the personal computer market. DDR5 is the new technology. All the new platforms that are being created use DDR5. Obviously, Corsair Gaming is one of the companies in this space that sells memory. They even break out the memory sales individually. So like you can look at memory sales versus the rest of the components, which is awesome. And I think that the opportunity is there. It's just a matter of can they execute and can they stay profitable and financially sound is kind of like the overarching thing for me at least. And seeing that demand levels are a little bit better as compared to Q1, really just the beginning half of the year, is really good. And again, a lot of Europe has been kind of up and down for a lot of retailers because of just everything that's been going on, whether it's the war, whether it's the currency, whether it's just the economic impacts that other items have like inflation. So it is something that I wanted to mention. I felt like it was important, so that's why I kind of left it there. Now, Michael Potter, the CFO, he said, we remain in a challenging environment in Q4 2022 with the strengthening of the US dollar against other currencies, continued weakness in Europe behind being headwinds for us. Worldwide channel inventory improved during Q3, removing much of the overhang from orders placed due to longer lead times in prior periods caused by the effects of COVID pandemic. We also reduced our inventory by about 15% quarter over quarter as we drive our inventory to more historical normalized levels. We are starting to benefit from the cost actions we announced last quarter, along with success of newer products we released recently, which we believe will have a significant positive effect on margins moving forward, some of which we realized in Q3 2022. We also encouraged by improving supply chain environment, including a significant reduction in freight rates, supply chain lead times, which are rapidly approaching the same levels as they were pre-pandemic. So going along with this, again, freight rates and sort of the overall supply chain. So freight rates went up a ton, and they had touched on it, quarter after quarter after quarter, especially going from like 2021 into 2022. They really, touched on this a lot. And then obviously lead times, because they use a lot of different chips and different, semiconductor related products. There's a lot of lead time because all of a sudden there was a huge influx that was needed and not a lot of suppliers to fill that demand. So people started charging a little bit higher price, hence some of the lead times also, if you wanted a faster lead time, you got to pay some premium bucks to get that. And a company like Corsair is not going to beat out other larger companies that have a need basis versus what Corsair's needs are. Now, the financial outlook for the rest of 2022, and again, there's only one quarter. but we currently expect net revenue to be in the range of 1.325 billion to 1.375 billion. And one thing I wanted to point out, and that's what this note is here. So the total revenue in 2021 was 1.9 billion, in 2020 was 1.7 billion, and in 2019 was 1.097 billion. So slightly above 2020 or 2019's level, but not really anywhere near 2020 and 2021. Not really surprising, again, given the demand that was pulled forward. But it's something I wanted to note because it kind of puts into context of like where we were at with this company. The adjusted operating income to be in the range of 20 to 30 million, which is awesome. Adjusted EBITDA in the range of 35 to 45 million. Moving on to the net income statement. So I'm going to look mostly at the quarter itself, but there's some things on the 9 months that I wanted to mention as well. So again, as we mentioned earlier, $311 million for the 3 months ended September 2022. And really what this matters is that it's 20% down. Now, the cost of revenue is down 17%. So obviously it didn't go down in the exact amount that net revenues went down, but it went about almost the same. So that's why you see a little bit of green there. Sales, general, and administrative is down 12%. So sales went down. The sales and G&A actually went down as well, which is good. The product development went up 7%. I mean, depending on how you look at this, could be good, could be bad. I do want them to invest into developing their products and R&D, pushing their products forward. And again, as they mentioned throughout their sort of earnings release, is that these new products have higher margins, which is great. Their interest expense is down huge, and that has to do with the fact that they refinanced over the last year. And then again, the net income loss of this quarter versus, the net income from the last quarter in 2021. And again, the 9 months, so that's really what I wanted to focus on. So negative $61 million versus $76 million net income in 2021. So it's not a good look for this year, but this year is almost a wash for a lot of different retailers. And again, I'm kind of watching the balance sheet in this case, not so much necessarily every individual line item on the net income statement. So we'll get into that in a second. Looking at the segment information, as I kind of mentioned earlier about the net revenue, you can see both sides are down. I just want to show you the gross profit and the gross margin. So you can see on the gross margin side that gamer and creative peripherals, 32.8%, and then the gaming components, 18.5%. Both are down gross margin wise from 2021. Not really too surprising, but I do think that it's important to mention when you look at the 9 months, that's really the key piece in all this. Like, look how far down gamer and creative peripherals are. And a lot of it has to do with Q2 2022 because of how far down that just overall quarter was and demand was. But their focus really is on the gamer and creator peripherals and trying to build that out more. It's a higher margin business, so obviously they want to drive more profit to the bottom line. Going on into the geographic information of where things are being sold. So the Americas, $164 million versus $189 million. So Q2 2022 or Q3 2022 versus Q3 2021. Europe and Middle East, so that's going to be 91 versus 147. So that's a huge decrease. And a lot of that has to do with what they mentioned in the opening statement. And then Asia Pacific is slightly up. So I think Asia Pacific, at least for me, is where a lot of the opportunity lies that they need to break into. And I think that obviously they know that, but I think Asia Pacific really has a lot of opportunity because gaming is very, very big in Asia Pacific, and especially people trying to get to that competitive level. If you watch League of Legends, if you watch CSGO, if you watch Rainbow Six Siege, if you watch, any game that's very competitive, that's in the esports era, a lot of these countries produce a lot of talent. And I think a lot of it is because they foster this talent very well. So even like people will become CSGO players and venture off into Valorant or to any other shooter like Call of Duty and do very well. And I think that, in places like Korea, they really do a good job of fostering this talent. So it's not really going to be surprising if you start seeing Asia Pacific pick up a little bit more. So moving on from that, the assets and the balance sheet, what we're looking at. So current in cash and cash or restricted cash. So it's down just ever so slightly. Again, their inventories are down from, December 31st, 2021. Their inventories are down, which is good. And again, as I mentioned earlier, it's 15% down from Q2 2022. So I like that they're focusing on inventory. I do enjoy that they actually have mentioned it like several times throughout the entire earnings release. Moving on down to their liabilities. So again, they had a lot of debt coming into this year. They refinanced it down. So you can see that as they kind of move throughout, they've been repaying it slightly. So the current debt maturing within the year, $4.6 million. And then the total long-term debt currently is $239 million. And I do have like a debt sheet here, but let's just go through it real quick. Other than that, there's not really any other crazy liabilities and things like that that they owe. As they manage their inventories better, obviously things that they owe will go down just slightly. Moving on though, taking a look further into that debt and what it actually is comprised of. So the term loan is due in September 2026. It was a $245 million loan, and really what that relied on, and I think it was a little bit higher than that actually. But really what it all amounts to is the fact that they paid off their original loan that was at a higher rate, and they got one that was at like a 3-4% rate. So it actually did a great job of decreasing the interest rate. Their credit rating actually went up along with this. So it's a good job that they did this, and obviously they're going to continue to pay it down. So here's the estimated principal payments though. So the remainder of 2022, they think they're going to pay 1.2 million. And then as the years kind of ramp up, you'll see the payments. And obviously if they get an opportunity to just refinance it again, or just, open up a new line or a new loan and pay it off and then continue carrying it forward, they'll probably do so. Or if anything gets kind of dicey, you'll see them do so. One other thing that I wanted to mention along with this sort of like balance sheet thing that they're doing. So they did actually put out a filing to sort of issue $75 million worth of shares. Part of that, I almost want to say like 50%, 40% of that was actually bought by EagleTree Capital, which is interesting that they would up their stake even more given that they already own a lot of this company. And, they have a lot of just control over the company in general. But they issued $75 million worth of shares, and part of that went to EagleTree Capital, part of that went to the issuing company. So we'll see kind of where that all shakes out when they come out with the 10K, and what that actually means for the company and the financial obligations and things like that. And we'll see, was there a reason they needed $75 million, or are they just doing it preemptively so they don't go into debt? And it was actually, I believe the price was $16.50, and I think the stock's trading at about that. So not any, they weren't significantly discounted or significantly overpriced. It was just right about where the company's trading today. So looking at the net income, or really looking at the cash flow statement, one thing I wanted to mention is look at the cash flow from operating activities, and you kind of take away the free cash flow as well from this statement. So looking at the net cash provided by the operating activities, a lot of it came from inventory changes along with accounts receivable. And even over the 9 months, this single quarter put them positive, which is kind of crazy. You know what I mean? It's kind of crazy that like one quarter can do that. But that's business. Sometimes things lag and end up in different quarters. And so you can see here the purchase of property and equipment. So $7.9 million versus the $35 million that they brought in. And then overall the 9 months, so $45 million versus the $19 million. So a little over $20 million worth of free cash flow so far in the 9 months. Obviously that can change in the next quarter depending on what happens. Going down to the financing activities, so they repaid a tiny bit of that debt, as I mentioned earlier, so 1.267 was repaid. And then you can see that, and this was something that I thought was interesting, and again, they kind of called it out in their actual 10Q, but the borrowing from the line of credit, so that in out of $223 million, a lot of it has to do with just the timing of shipments and things like that, but that is something that you want to pay attention to, is that line of credit, and making sure that you're actually understanding like what does this all mean, and understanding like what this actually impacts on the business. Companies like this use line of credit to be able to buy stuff they don't necessarily have like the cash, or there's like a lull, but it is something you want to pay attention to, because $223 million in a line of credit's kind of a lot. So moving on though, this is stuff that they brought in from their investor presentation. So this is something that I wanted to mention. So self-built gaming PC market continues to improve as GPU prices go back to MSRP. And this is a graph that's from their investor presentation. So you can kind of see like what the market is actually tracking and what the market looks like and what the total addressable market is. So you can see from 2019 over to 2022, major increase. Obviously, basically Q2 2020 through, honestly, I'd keep going through Q4 2021. A lot of that was stimulus money. People had extra money to just throw around. People were staying at home. People didn't have anything else to do with that money. You weren't able to spend it on anything else. So a lot of that money got thrown at this market, and then obviously it's going to normalize probably a lot lower to where you're seeing it now. It's probably a more normalized PC building market. Continuing on with that though, you can see that Corsair's market share over just the last couple of quarters and even just within the last year has gone up significantly. So looking at the memory side, look how dominant they are in this market share and market space. It's kind of crazy to see them dominate it like this. And again, their products are very good. It's not really that surprising. Their components tick down just a tad. And it's not very surprising to see it tick down again, given everything that's kind of happened. But the market share for the gaming memory, especially as DDR5 comes out, will be huge. The average selling price, so Corsair maintained their average selling price while maintaining, like their cost cutting measures and reducing their inventory and making sure that they are able to basically sell through their products but not take such a haircut on it that they lose money a ton. So you can see that again, their average selling price was slightly above the market in the components and memory space, and then gaming and peripherals, they maintained that average selling price being a lot higher. And again, they're competing with companies like Logitech, HyperX, what are some, G-Skill. There's so many companies now. It's kind of ridiculous. But those are just some, I guess, to just name a few. But there's a ton of different other companies out there. So to see them selling at more of a premium and being able to command that premium is great. Again, this is sort of the stuff that you want to pay attention to. If their sales price starts to go down a lot and their market share starts to go down a lot, that's a cause for concern. And obviously you want to keep track of their balance sheet and things like that. But moving on, you're going to see this is all from the earnings call and some stuff that I wanted to mention from the earnings call that they had touched on. And I feel like this is really important. So let's dive right into this. So Andy Paul said, as we've reported in recent earnings calls, this year has been marked by excessive inventory in the channel, especially in Europe. We continue to report and make comments on consumer sales from our channel as well as our revenue from sales into the channel to provide clarity on the progress we are making. For example, in the US, we've made great progress in reducing this inventory, and stock levels are now closer to a more normal level. European channel inventory position remains elevated, but is also slowly normalizing. Our target is to reduce our worldwide channel inventory overhang by roughly $100 million from the start of 2022 to the end of this year, with a little left more to go in our creative and peripheral segment and our European channel inventory. So again, they're really trying to do a lot to get into this inventory sort of glut and cut it out and be able to actually reduce it by a lot. You kind of saw that on the balance sheet already. So changes like that are needed to normalize based on consumer demand. And again, as we've seen with other companies, consumer demand is waning quite a bit. But it's something that you want to keep track of and make sure that companies aren't overspending and buying products that people don't really want. So what will end up happening is Corsair will sort of take whatever they were gonna buy and use that to develop new products, and hopefully consumers will buy and have interest in the new products versus buying, a normal K70 or K30 or K110 or whatever keyboard or memory or whatever it is. So it'll be interesting to see as, again, people are refreshing their computers and trying to get that newest hardware. Especially, I know a lot of people in the PC space that are definitely looking to refresh. So it'll be interesting to see what actually happens. Moving on, these are some Q&A questions. So Drew Crum, an analyst, said, just your comments around reducing channel inventory going forward. How much is it based on change in consumer demand or behavior, and how much is it stimulated by promotional activity intended to use through the holiday quarter? And then I have a follow-up. So we're not going to have really like a follow-up to this question, and really this is the only question, so that's why a big piece of this is I want to focus on the channel inventory. So Andy Paul said, so if we're talking about how much channel inventory has been reduced based on consumer demand versus promotional, let me answer that in a different way. The increase in inventory was caused by over-ordering from a channel, coupled with, in some parts of the world, especially Europe, a slight reduction in consumer demand after the Ukraine war, so that's been the main effect. Now, the reduction has been mainly just shipping as per normal. We've done little bit of promotion, but not excessive amounts, I'd say. Probably really the only thing left is there's a little bit of overhang with gaming peripherals, and it's mostly in Europe, and we expect it to resolve itself by Q1. So closing thoughts and really what I think that there's, for me personally, I like Corsair Gaming. I like the management team, like what they've done. I like the balance sheet. Granted, they do have a little bit more debt than I would care for, but if they can continue generating free cash flow and sort of get back onto a more normalized pace, I think that that'll be awesome. Again, their year-over-year comps are going to be crazy because of what they're comparing to in 2020 and 2021, so not really that surprising there. But as long as they're beating out 2019 and continue to grow the business, I don't expect this business to grow at 30, 40, 50% a year. It's going to be one of those like 7 to 15% maybe, and just slow, steady growth. And then as they find opportunities, they'll continue to invest into that. Or if they find acquisitions or whatever, they've bought positions in other companies, and it'll be interesting to see what they actually do. So I was very, 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 very pleased with this quarterly result versus Q2 2022. And the same thing goes for a lot of the other companies that I had. Q2 2022 just seemed like the death wish of everyone. So it's kind of interesting to see. But this was a lot better than I had expected and a lot better than Q2 2022. So I'll take what I can get, but I'm gonna keep monitoring this company again. The debt is something that I'm watching closely, along with sort of the market share and the consumer demand and things like that, because this is a premium product in a premium space where it's more of a want, not a need. So we'll see what actually ends up happening, but let me know what you think down in the comments below. If there's any companies you want me to look into, let me know down there as well. With that being said, have a great day and happy investing.